AVID Investors,
Yes.
we have Dominik Anton here with Twin Rivers, who just gave us a great highlight presentation on DSTs.
Yes.
Give us the takeaways.
Okay, so a couple key takeaways. Having clarity on your long-term financial goals is super important. It's really going to help to guide the whole process in terms of where to invest, how to do it, how much should be invested in the various DST options that you have, and having that clarity of cash flows versus long-term appreciation potential. The other key thing is having a plan to enjoy the wealth that you've created. So, I've seen a lot of people where they work really hard and they don't make that transition. And unfortunately, I have to, slow people down and tell them, hey, we need to go out, spend some money, invest in the experiences that you've always want to have in your life, and transitioning your real estate investments to something a bit more passive is really helpful in being able to do that. And lastly, incorporating estate planning in the overall process is very important as well. So having a good tax team, having a good legal team, reviewing everything and working, as a team is really important to make sure we pull it off correctly.
What I also heard was that if you're considering a 1031 exchange, you are already after cash flow and tax efficiency, where you're swapping till you're dropping in a tax deferring plan. But the DST, it sounds like, also gives you less involvement than you should have in your overall real estate portfolio, and a clean estate transfer to the inheriting kids. And with a 1031, since many of us, when participating in them, are wanting to avoid boot, there's things like we have to replace the debt or go up in debt. And a DST is a place you can put your money to avoid boot, either in conjunction with a standard real estate purchase from a partial exchange, or from the need, say, for more leverage. Because on the open market, there's finite number of opportunities. With DST, there's multiple options with various levels of the timing you may need, the debt you may need, or a flexible buy-in to use up the rest of the funds. But we have to remember it's not liquid. So unlike with your own portfolio, you can't just decide when to sell and time the market. It's going to have a predetermined lifespan. And it can serve as a backup if you identify it. If your other deal falls through, you can identify a DST and then still have a successful 1031.
Yep.
So all great information here, Dom. Thank you so much.
Yeah, thank you.
AVID Investors, thank you so much. We're still available for questions.
Yeah, thank you, Stacy.